advantage. John, it's great to see you. I think that it's very interesting because while you're not saying it's a depression or the Great Depression, you're saying we should sort of act like it is. Explain that. Is that just us being very cautious?
Well, I think it's always good to be cautious, right? Because when people say this is going to happen or that's going to happen, you're not prepared for the bus who comes down the street you did not see, and it's got your name right on it. Okay? And hopefully you get on after you get hit by the bus and be able to get the license plate. So I'm saying it's safe to act as if Depression 2 is in the cards. By the way, we thought this was going to happen under the last administration, so maybe it's late. But Michio Kaku, PhD, astrophysicist, suggests that these things just occur every 80 years or so. Now, when people hear the word recession and depression, they go, oh, no, that's bad news. Maybe not, because if we look at the first depression, we can see that on a per capita basis, more Americans became millionaires than any other time in history. What's bad about that? So if you have cash, you get bargains, and when you get bargains, you get to buy low and ultimately sell high.
Right. I mean, because at this point you have some stocks that are down 20, 30, 40%. And if you're interested in getting in there, whether it's an ETF or a specific equity, there are opportunities. So it's not that you're so worried about the overblown narrative. It's just that you're trying to navigate through this time, right?
100%, because as I say, don't get lost in the words, right? Or get depressed because it's a word you don't like. Look at it from the standpoint of opportunity. Equity isn't king, cash is king, and sometimes that means we have to reposition out of places where we've had good profits to be prepared for prices to be less than they are today so that you can move into that space, wherever that space might be.
Right, and I want to talk about some of the sectors with you. I know you have some favorites. The question today is, why are we back higher? After 2 days of selling for oil, which really dragged on the markets, it's not that so much change. We did get the approval of the next bill here for small businesses, which that is reassuring for many. But do you think that we're in somewhat of a trading range? We're not seeing those 5% or 7% volatility days anymore for the S&P 500, right?
No, and I think maybe the market's looking out maybe 30 days, but not out 60 days. So, I mean, the path that we're on right now, it took us about 3 years in Depression 1 to get to 25% unemployment. At the rate we're going, as you're talking about it, that could happen in months. Now, depressions do take years to occur. But my point is that, if people aren't spending for whatever reason whatsoever, we've got to see that earnings are going to be disappointing over and over again, maybe 60 days out from now. And things are, I think sometimes we get ahead of ourselves. I think that's exactly what the market has been doing recently. I call it getting high on hopium. We're looking for the good news, and sometimes we have to, buy the rumor and then sell the news.
Right. I know that you like healthcare. Healthcare is one area, and it's not just because of COVID-19. In fact, you like the group overall. You think it's a good play.
Yeah, and by the way, healthcare rebounded. It had a slower decline, a less severe decline in 2008, and rebounded faster. And when I talk about healthcare, I'm not just talking about the stocks of healthcare companies. I'm also talking about the real estate investment trusts, or the ways to buy healthcare real estate. I mean, let's just look at it like this. 10,000 people a day are turning 65 through 2030. That's irrespective of COVID-19. So that, to me, has some wins behind it, that's going to carry this forward, no matter what happens in the meantime. And by the way, speaking of opportunities, Nicole, who would have thought that Netflix would show up as a defensive play? Who would have thought that?
Right.
So,
I know. I see what you're saying. Yeah, I know what you're saying. It's so true. I mean, sometimes them things come out. Really, Netflix, everybody was saying take it out of FANG, right? Because the truth is everybody's like, oh, I like FANG, but not Netflix. I like FANG, but not Netflix. It seemed that because there were so many streaming competitors coming online this year, and so people really put Netflix aside only to see it move to some new highs. So that's been exciting and have a good quarter, too. The other areas you like in addition to healthcare, you also mentioned that you like grocers. Explain that. I saw and I was reading how many of these companies, breakfast foods, are doing incredibly well. Grocers are a necessity. Your thoughts on grocers?
Well, yeah. I mean, look at the Costco's, right? all the warehouse stores. I mean, people are lined up to get in. Who imagined that would happen? So they're not complaining about all the sales, and they're not complaining about all of us who are in panic mode, buying up all the water we'll probably never consume or all the toilet paper we'll probably never use. They're happy to sell us exactly what we're willing to pay for. And clearly we're spending a lot at a lot of these places, more so than we were just 3 months ago.
What does grocers mean? You mentioned Costco. What else goes in there? Is that, I mean, not General Mills or Kellogg's? Is that more like Kroger or Target?
Yeah.
Walmart? What are you looking at when you say grocers?
Yeah, all of those. Let's look at it this way. Where are we going for our staples? Right now, maybe some of us are going to the restaurants because they can't sell anything else. But the grocers, those are the retail stores. That's what we're stocking up on everything we possibly can store up so that we hopefully don't have to go outside and have the coronavirus hit us.
Right. Tell me about technology. I saved it for last because I know that that's often a favorite of folks, and it really has just been the group that's run so hot, as we ran up to new highs.
Yeah, we're always going to say, do not put your money on the table until you have a buy strategy and, most importantly, a sell strategy. Most of us do not have that combination. So I'm going to say that technology, clearly we're all benefiting from technology. Look at Zoom, how we're communicating these days. I think I've been on 3 Zoom calls just this morning. So that's kind of new, and that looks promising. There probably will be more volatile. Technology will probably be more volatile. But as I say, you want to put in the systems to declare up front before you put your money on the table. What am I buying? Why? How can I diversify? And what is my sell strategy? And I must say, Nicole, to the point, the most important thing I think investors can do right now is assess what kind of loss they can expect, okay, that they're willing to accept. In other words, we saw people off 20 to 50% just for the first 3 quarters, and they just were demoralized. If you said if you found out I could live with it, let's say an 8% loss, and then put your portfolio in such a way where it might perform within your parameters, you can let go of what the market does because you can see that for the most part, you might be flat or down slightly where the market is down much, much greater, but you don't have to watch that number. You're watching your own number.
Yeah, you mentioned Zoom. I mean, technology is so broad. We've been watching tech, telecom, semis, AI, robotics. I mean, it just seems like technology is such a broad brush. You mentioned Zoom. Are there parts of technology that you like more than others?
Well, the chips right now, the semiconductors, I think they're going to have a little difficulty with selling their products. So you just have to look at what the demand is. And I think that's also something that's important, regardless of what you're thinking about, what field you're thinking about entering. Do you see demand? And one of the primary ways at looking at demand is not by sales, but by products and services that people are using based on age. Okay, like we're talking about healthcare,
right.
65,000 people a day turning 65. That's just happening. Has nothing to do with the virus, has nothing to do with who's in office. No one's manipulating that. It's just the course of action. Now, on the other side of that equation, what we also see that most people aren't talking about, and I think it is very powerful and it is also unprecedented. Globally, Nicole, we have more people 65 and older than 5 and younger. So when people say, well, this is just going to be magical, it's going to be a great V-shaped recovery. Now, I hope you're right, but I suspect it would be wiser to think in terms of it could be W, it could be U-shaped. It also could be L-shaped. L-shaped looks like what we went through after the Great Depression. It took 25 years for stocks to come back, 4 decades for New York real estate to come back. More recently, we all knew to a person that Japan was going to be number 1 in domestic product. And neither the stock market nor the Japanese real estate market are back to even from 30 years ago.
And we're going to have a whole feature on real estate at the end of our show today. So John Grace teeing us up for the back half of our show, all about real estate. Thank you, John Grace. Great conversation.